Hey guys, welcome back to the channel. Today's video, we're going to be looking at the S&P 500 and the bull market that is here, guys. Now, if history repeats itself, we are going to see a massive increase to the S&P 500, including the stock market in general, over the next couple months if the Federal Reserve decides to actually pause the rate hikes. Now, the Federal Reserve has quickly tightened conditions. We've seen the rate hikes over the last 15 months in an effort to really reduce and fight inflation. Now, we think that we have gotten to actually phase two, or the second part of the cycle, where the Federal Reserve is going to pause rates. Now, if that happens, again, looking in history, in 1970, Federal Reserve had 11 rate hikes, and the S&P 500, once it was paused, went up 14.8% during the following 12 months once the Feds paused the rate cycle. So that could make the S&P 500 absolutely soar. If history repeats itself, the stock market, we could see soar. Since 1970, the Federal Reserve engaged 11 rate cycles. During that time, the S&P index has returned an average return of 14.8% during the following 12 months after a rate increase cycle. So if this is going to be the last one, guys, if the Federal Reserve does decide to pause, you could see the S&P 500 absolutely soar. Now, of course, past returns are never guaranteed future returns, and I'm not a financial advisor. I just use the tools and the information that I have provided. Now, why might this happen? Rising rates have a contradictory impact on the economy. Once that stimulation stops, the investors may feel more comfortable putting money back into the stock market. Now, if you look at 2022, the crypto market, the stock market, a lot of money was pulled out, put into CDs, put into financial institutions, banks. We've seen high yield savings really see a massive increase. That money came from the stock market. Now, if the Feds are getting to a rate of evening out rates, or even later this year, possibly next year, lowering rates, we are going to see money flowing back into the stock market, and that is going to make a big difference. Now, my favorite stock with this, guys, is the VOO. It is the Vanguard S&P 500 ETF. Now, we have talked about this for a while, and the reason, even Warren Buffett has talked about this, guys, investors should consider an S&P index fund. Let's break this down on exactly why. Like we said, the Vanguard S&P ETF, the VOO, tracks the 500 largest US companies, which of course I absolutely love. Constitutes include value and growth stocks in all 11 market sectors. So with this literally one single ETF fund, you are covering all 11 market sectors, which is awesome. Buying shares of the VOO is like buying a slice of the United States economy, and the overall fees with this is super low when it comes to looking at it. So what makes up the S&P 500 VOO? Biggest holder of this fund, guys, is Apple. If you know, Apple is the largest company in the United States, and it has continued to grow, guys. We have seen exponential growth from Apple. But some, again, the top holders, we have Apple, Microsoft, we have Alphabet, which of course is Google, we have Amazon, Nvidia, Berkshire Hathaway, Meta, which of course is Facebook, and Tesla are some of the largest holdings. Now remember, this is comprised of 500 largest companies within the United States, which is the reason I have always said, if you're looking for one solid thing, if you're looking for diversity, this is really the way to go, just because you are getting all of the different market sectors to really focus on. Now, as we discussed, guys, the S&P 500 could rise about 15% within the next 12 months, which is going to be massive. Now, if you were like me, and I actually do dollar cost averaging, we've talked about this before, guys. So we have X amount of dollars that goes into the S&P 500 fund every single month. That means in good months, we're buying a little bit less, but that means looking at its entirety in 2022, that means we bought a lot more as the market continued to decline. Over the entire year, we kept buying the S&P fund cheaper and cheaper and cheaper and cheaper, because again, it is really has been a very consistent moneymaker over a long period of time. It benchmarks the index, whether it is a bear market like we have seen for a long time, or if it is the bull market. It really does make a big difference, guys. It still produces a return of over 1,600 or 9.9% annually, which again is pretty nice to see. At a pace, $150 invested into the S&P 500 would be worth $123,000 in 10 years. Take it out 20 years, $441,000, and then take it out 30 years, only 30 years, guys, you have $1.3 million putting on $150 in there every single week. I don't know many 401k plans that will reach that amount within the time. So let's take a look at what I have. All right, guys, so here is my S&P 500 ETF. As you can see, current value is at 52. But looking at the gains, this is really the big thing, guys. Now we started this, as you can see right there, it is September 27, 21. And you can see over here, this is what we've made with a 22.84% return because of dollar cost averaging, guys. Now I cannot stress this enough. When you get into dollar cost averaging, when you really pay attention to what you're investing in and how you're investing, you will see the value increase over time, because I consistently put funds into this every single month. So you can see, guys, out of the total that we have put in there, that has been the gains that we have seen. Now I did have a couple different investments. We went all into the S&P 500, and I'm going to kind of share with you why. So looking at the value of time, guys, these have been the contributions. As you can see, it does accumulate over time. We get dividends in this. We've already earned $327. But looking down at the actual fund of the VOO, right there is the Vanguard S&P 500. You can see, guys, this is the total return that we have seen with this specific fund. Now, overall, again, my total return is a little bit lower because we did have a few other investments in here that weren't performing as well. Putting everything or entirety since I bought the S&P 500 back in 21, you can see the returns of 34.27% right there, guys, that we have seen. Now, looking at the historical performance of the Vanguard S&P 500, again, this is really one of the big things to remember, guys, is overall, this is the 500 largest companies within the stock market, which makes up the VOO. You can see the share cost right here on 372, and then also the expense ratio. That is something that I wanted to talk about, guys. Right here with the expense ratio, you can see the expense ratio is incredibly low. Even when we looked at a lot of our dividend yields, they were much higher than that. When you looked at the expense ratio, we had even some that were 0.5. We had some that were a little bit higher. So overall, looking at the total cost of owning this fund, dividend yield 1.52, so still a pretty good dividend yield. Remember, we do have companies in here that do pay a considerable amount of dividends. So let's look at the details of this fund, guys. And this is where I kind of want to say, if history kind of repeats itself, this is what we're seeing. So right here, guys, you can see in one day, it is up about a 0.91. But when you start going out and actually looking at this calculator in the longevity, so looking over the course of a week, we're at 1.35. So we got about a 5% increase. And again, or excuse me, a $5 increase in there. When you go out a month, we're at 5.42. Now, I don't know any liquid accounts. I don't know any CDs at this point that are going to breach that 5.00%. You might find one off, but you can see, guys, we made a little bit of money right there. When you go out 3 months, now we're at 12.5%, guys, in 3 months. Again, I don't know anywhere that you're going to get this type of return over a longer and longer period of time. 6 months, you can see it goes down, because now we're starting to get into the 2022 era. 2022 was a very rough year for the stock market. But again, you might look at it, one token, a very rough year for the stock market. The other token is a absolute prime time to invest, guys. If you were dollar costing averaging during that time, you'd have the 33% return that we are sitting at right now. Now, looking at year to date, we are up almost 13.5%, which is again kind of crazy to think that it is up that much year to date, which of course starts on January 3rd, 23, going up to June 12th of 23. So about the last 6 months, we're up 13.5. 1 year, again, it goes down a little bit more because now you're looking at June of 22. We go to the 2 year, again, one really bad year to one really good year, still up a little bit. But then you look at the 5 year, guys. Now remember, stock investing is a long-term game. When you look at 10, 20, 30 years, things of that nature. And you can also see the D right here. It is when it has paid dividends. But when you look at the 5 year, boom, you get to 55.53% over the last 5 years. So again, if you were putting money into the S&P 500 or the VOO Vanguard fund, you would have a 55.53% return if you kept the money in there. And again, over a 5 year period, I do not know many other places that are going to yield not only the consistency that we see with this, but a 55% return. I know, even looking at the last 5 years at my 401k, at other investment accounts, they are not even close to a 55% return. I believe over the last 5 years, we're at about a 10 or a 12. But again, the Vanguard VOO has yielded that 55% return. And again, when you look down here, the expense ratio is super low, guys, which is the exact reason why we do this. Passively manage to hold the S&P, the large cap S&P funds, which it does. And then of course you can get into the allocation or the breakdown, kind of what we talked about that they have in here. We have Meta, there is United Health, there's ExxonMobil, so you have some gas in there, NVIDIA, Microsoft, Apple, Amazon, and of course Google, guys. Those are only the top holdings. Remember, that is right, guys, 500 companies, which again, it is kind of crazy. crazy. But looking here, it is common stock held within the United States. I highly recommend buying it. However, I am not a financial advisor, so remember that, guys. Take it with a grain of salt. Do your own research on this, but let me know in the comments what you guys think. And as always, thank you guys for watching.